What's up, Mortgage Coach community? Dave Savage sitting down with Sean Herrero. Sean, it's been a long time, brother, since I've had you on the channel.
I know. Sorry about that. It's been I've been running, but I appreciate you having me out here.
Yeah, no, I think the last time I can remember with clarity was when you hit the $100 million mark, and something that you'd been working on for some time. But I mean, it seems like over a year ago. Has it been that long?
It must have been, yeah, because I think I did that in 2020, and then last year I did like 220. So yeah, it
Woo!
must have been over a year.
Jeez, I can't believe it's that long. So you did over 220 last year.
Yeah.
So guys, and how long have you been? I mean, you've been in the mortgage business for a while, but a full-time referral-based local loan officers. How many years has it been now?
January 2017. So I guess this is year 5.
Year 5, and so in year 4, you hit 200 million.
Yeah. Yeah. I mean,
so guys, Sean is an incredible success story. I first met Sean when he was I don't know, in business development. He was, he got his paycheck from recruiting loan officers and then retaining them, mentoring them, helping them be more successful. And I can still remember there was a year where you were like, I can do it. And then there was a year where I'm just going to do this myself. And I'm going to show everybody how to be successful. And here he is, guys. In 5 years, he's gone from, managing loan officers to becoming one of America's most successful loan officers. So dude, I do want to get into specific topics and issues in the market.
mm-hmm.
Why don't we just give an update? Like, you killed it last year. What's the goal this year? Give everybody a little idea of what market you're in and what your plan is for the year.
Yeah. So for me, so did 220 last year. I forget, I did 260 of those transactions were purchase transactions. So with rates going up, I'm like, okay, I need to at least stay on pace with what I did on purchase last year. But I mean, now that I tasted 200, I'm not willing to give it up. So that's my goal, is to do exactly what I did last year, but just, it'll be, primarily purchase driven this year. I'm in Northern California, kind of lending all over. I'm a preferred lender in Virginia Beach, of all places, even though I'm 3,000 miles away. So my goal is just to help people as they leave my state. A lot of people are leaving, so I need to be able to help them transition. And yeah, just kind of focus. This is actually a good question, because I was thinking about this last week. I've been looking at my transactions of who do I really enjoy working with, like the buyers that kind of have that feel good. And then the ones that are, you're like, I can't wait for this to be over. So I'm really diving into that deeper to say, I'm going to focus my marketing towards these people that give me that fulfillment as well as the financial benefits.
I love that. I am doing a sales meeting, and I'm actually doing it with Jeremy Forcier every Tuesday next month. And here is kind of the layout. One, we want to make sure that everything we're teaching is like loans now, like we need more loans today. Mm-hmm. While a lot of people aren't going to be doing more loans, you can pick up market share in this market. So what can you do to gain market share? And then, of course, how can you increase your competitive advantage? And I'm going to be focusing on these 4 strategies, improve conversion, win with rate shoppers, recruit realtors, strategies and scripts for more cash out refis, and then, a bunch of different strategies. And this stuff, move up analysis, cost of waiting. So one, I would love to know, out of those 4, which one are you most passionate about when you think of those 4 strategies?
So I think competitive advantage leads to the rest. If you figure out what your competitive advantage is, then you're going to be able to recruit more real estate agents to get more referral partners. You're going to figure out how to overcome the rate conversation. You're going to figure out how to help people refinance in an increasing rate environment. If you know what your competitive advantage is, to me, that's the foundation. And that's going to be different for all of us, but you figure that out and the rest just lines up.
And what is your competitive advantage?
So that's another great thing. I was talking to, I have a client right now who owned a modeling agency that I shot photos for in 2008 when everything went sideways. And I'm walking her through buying her house. And she said today, she's like, it is so weird for me to hear you be so analytical and look at numbers with how creative you are. And I'm fortunate to have the left and right brains. So I somehow am very analytical and like numbers, which I was surprised by when I got into this. But I also have a creative side for marketing. And so I would say that having both of those is kind of my competitive advantage, because by understanding both, I can manufacture loans, I can underwrite, I can do all that really quickly, but I also know how to market, so I can teach others how to market, which helps me to gain more referral partners.
I love that. You know, I've interviewed a lot of loan officers, and it's been a lot of years since I did a whole training on the art and science of selling. But there's what you just said is creative, that's art, and then numbers, that's science. And I always find that for loan officers to achieve their, call it their optimal success, it's when there's a balance. Like too much science, not as successful, too much art, you got to find that balance. And so well, let's talk about a big challenge in the market today, and that is getting borrowers off the fence and not just getting them off the fence saying, I want to buy a home and I'm going to but getting them to make a winning offer. That means they have to sometimes stretch beyond what they wanted to do. So let's talk about how you're doing that strategically. Also, how often is that coming up in the market for you right now?
I mean, that's every buyer, every single conversation. Every single time. So I go into it knowing that that's going to be the concern, because what I try to do is, to me, what we do is fourth grade math and psychology. The psychology is trying to figure out what are people's fears and how do we help them overcome those. And for me, so buying a house is obviously a very emotional decision, and their emotions are, house for my family, all those things. But a lot of emotion right now is I really don't want to overpay, and I can't believe what the market's doing and all these other things. So I try to just use data to show them data and analytics. Let's take the emotion out of this equation and let's address your concerns from a data perspective. So if it's, oh, I don't want to go over ask. Well, we don't know what they're asking. We just know what the property's listed at. We have no idea what the seller is expecting to get. So I show them how a list price is just very arbitrary. It's like eBay. You can list something for $1. There's a secret reserve price that we cannot see. And their goal by listing for $1 on eBay is to get people to bid it up and above that reserve price. That's what real estate agents are doing with houses now. Fortunately, there's enough data to where you can kind of look and see what things are selling for and get a benchmark of where it's going to go. But at the same time, you have to be like, if it's the right house, it's the right house. And I think for me, I went through it personally last year, 17 offers, had to match the all cash offer, had to close in 2 weeks and be non-contingent. And I stretched $100,000 higher than I wanted to. So I speak to kind of my personal experience to let them know they're not in it alone. And let them know every buyer, like every single person that's trying to buy a house right now is having these same thoughts.
Yeah, you did a great job. And if I recall, you actually made a 5-minute video for the Modern Mortgage Summit. You actually made a couple of them.
That's right, I did.
And guys, those are in the YouTube channel. So while I didn't get a YouTube interview out of you last year, you did create some killer content for the Modern Mortgage Summit. So if you want to hear Sean just create something like 5 minutes or less, super clean, made it for realtors, something that would actually educate a realtor, motivate a realtor, it's at the top of our YouTube channel, and I'll put a few links down below. So let's walk through that process, because I want to make sure people are hearing how you do it. And I think you gave a good high level description of it right here. But like what are some of the most important questions to ask? And then when do you use a total cost analysis? And what are the most common TCA experiences you're delivering right now?
So I would say that I typically use the TCA after I've done the pre-approval. So my process is, I get a referral from a real estate agent by email. I'll reply to that, send my Calendly link, do a Zoom call just to answer any questions, comments, concerns they have, get an idea of what their plans are. I follow that up with my pre-approval kit. So application documents we'll need to review. We get them fully approved and underwritten. And then I send them a TCA. So I say, I'm going to send you your pre-approval letter, which any lender will do, but I'm also going to give you a personalized buyer's guide that we will use as a funnel of information from start to finish. And that's the TCA.
Wait a minute. That's a new one. I haven't heard. I'm going to give you a personal buyer's guide, and that's the TCA. I love that. Yeah. So guys, make it your own. A lot of people are calling it the total cost analysis, but also sometimes, if it's a refi, it's one thing. If it's cash out versus rate and term, it's another thing. If it's a TBD, could be something else. And guys, and if there's a appraisal gap concern, you might call it, an appraisal gap analysis. Who knows? So, but I love that. So this is your buyer's guide. Now, what do you have some standard scenarios that you show, or like what's the most common way you're driving that conversation?
Yeah. So what I do is, to me, I always tell my clients, I don't care what the banks say you can afford. It's what you want to afford that matters to me, because my experience is these days, people aren't looking to go broke to look rich. They don't want to max themselves out. They want to have a comfortable monthly payment and make sure they can live life the way they want to. And that's really important to me. Lifestyle is everything. So what I do is I start off the TCA with 3 price points. I show them the price they requested. So let's say I have an example up here. So I'm going to say it's 800,000.
By the way, if you want to pull it up and show it, I do want to show it. So that might be a good time to do it. And hey,
Okay.
we do have a nice little
yeah.
group.
So let's see.
Time out. We do have a number of folks watching this live on Facebook. So anyone watching this live on Facebook, if you have a question for Sean that you want me to integrate into the conversation, put it in comments. For the bigger audience that's going to be watching this on our YouTube channel, still put your questions down below. We'll get to them. The TCA that Sean's going to show here in a minute, I will put that down below so you can see his actual total cost analysis. And I'll put a few more 5-minute videos that highly recommend you check out. I'll tell you when I see it, Sean. And I see it.
Okay, so this is one I did. Well, she just got into contract, so this is a little updated. But what I try to do is I start off with their price point. So I always show 3 options. This one's only showing 2 because we went one step further and I just realized that. But basically I show them 3 options. So let's just say somebody said, hey, I want to buy a house at 800,000. All right, great. Here's 850, 900. Just give them, I'm going to step up because I want to make sure that what things look like in case the perfect house is listed at 800 and we have to go higher. So I don't want them to think I'm upselling them. I've done this enough to know what's going to happen. So I try to give them that benchmark. And then it's like, okay, well, what's the difference in monthly payment? What's the difference in out of pocket in these $50,000 increment changes? And how do you feel about this range? Does the payment or cash out of pocket feel too high, too low? And then we adjust accordingly. That's why I say it's a funnel of information. We're starting here. And by the time we're done, we're going to be to here. So with this example, so this would, I guess, be the second iteration. So she was considering making an offer. She was going to go in at 925. The agent texted me and said, hey, I'm trying to get her to go up to 950, but she's really stuck. And I said, don't worry, let me update her buyer's guide and I'll show her the difference. So I updated it to show her 925 and 955. And I said, your difference in monthly payments, $30 a month, and your cash out of pocket is about 20,000. That doesn't seem right. I got to fix that. Something's off there. Because this specific buyer is she wants to put exactly 340,000 down. So I'll figure that out later. But bottom line is the house worth losing over $31 a month? It doesn't matter. You're not paying 30,000 more for the house. You're paying an extra $30 a month. The bank is putting up the majority of the money. So we have to stop asking ourselves, is the house worth this price? And instead say, is the house worth it to me? So it's not how much does the house cost? How much does the house cost me? That's what matters.
Yeah. Also, if you're putting in appreciation rate and houses are appreciating, guys, the house is going to be worth more, so paying less doesn't necessarily hurt you. Now, again, that's assuming you're not overpaying too much. And that's assuming that things are going to continue to appreciate. But most people that are making these offers, they do believe that it's going to get higher and higher. How often are you doing kind of a cost of waiting? One of the things I've seen, because I've been doing a lot of these interviews, hey, how do we get people off the fence and winning the house of their dreams? And I'm seeing everything from option 1 is what they applied for. Option 2 is what they qualify for. And then option 3 is actually cost of waiting, where they're actually showing, hey, what if rates went up? And hey, what if values went up? How are you bringing in cost of waiting into the conversation?
I do it as part of the conversation. So what I end up showing people, so step one, Zoom call before I do a pre-approval. Step two, pre-approval. Let's go through your buyer's guide, and then we do another Zoom. And I'm showing them, the Freddie Mac historic chart that goes back to 1971. I'm showing them that mortgage bonds are sitting at the same point they were in 2018. So I'm showing them that, the rates we're seeing today aren't high. They feel high because we were artificially low for 2 years, which I thought we might have these rates for 2 months, and it turned into 2 years. So I show them that rates aren't high. They're just back to pre-pandemic levels. And back at that time, we were saying these are the lowest rates we've ever seen in history. 2012, 2016, 2018, like second half 2018, and then 2019 are the only times we'd seen those rates. So if you're waiting for rates to go back down to pandemic levels, why would that happen, right? I don't even think if the pandemic kicked in again, they would take that action. So I kind of walk them through that. I haven't done as many illustrated cost of waitings because to me, I don't want it to feel like I'm trying to scare them into something. So I keep it really conversational. And then if they are like, hey, that made a lot of sense. If rates do go up, what happens? And I could show you another one. I have a client. Let me see. I'll pull this guy up real quick. I updated this one for this client this morning. He's been looking at homes since December, and his rate is up almost 2%. And I feel really bad for him because we've had a lot of opportunities to win the house, but he would not go higher in price. And so, he asked me today to update it for him. And the last offer he made, the interest rate was at 3.875, and now I'm at 4.6. And I had to lower his price from, I think we were up to $1.2 million, and now I'm down to $1.1 million. So, I guess that's really what I'm trying to do is help people not learn the hard way, because there's no second chance. These prices are going to rise. The rates are going to rise. If you wait for prices to come down, like this is something I was hearing that made no sense. If rates go up 1%, prices will come down $100,000. Well, it doesn't make any sense. It should be at least a percentage, but we're not seeing people back out of buying homes right now with higher rates. If anything, it's more competitive because people are so scared of rates continuing to rise. So it's a different landscape. And I just try to explain it to them best I can, giving them data and analytics to show them how all of this works so that they can make the most educated decision possible. And then if they decide not to go up in price, they decide not to go up in price.
All right. So you stop sharing your screen. If you could get me a couple TCAs to put down below, I think you already sent me one. I feel like what you just showed would definitely improve conversion. I think it would definitely help you. You're delivering more value. So from a rate shopping standpoint, I think you're less likely to get rate shopped, and you're more likely to win because you're giving families options. So strategy one in this month's sales meeting, in terms of recruiting new realtor relationships and getting, whether it's getting more meetings or having, more compelling meetings. Anything you're doing or anything you're willing to share with everybody?
Yeah, I'd say from a marketing perspective, social media has been my best friend. I have realtors reaching out to me. Like it's the opposite. Hey, Sean, I'd love to grab coffee and pick your brain. I'm like, well, this is nice. So it's kind of turned around the opposite way because of the marketing that I've been doing. But then at the same time, once they reach out, it's like, okay, I now have that opportunity. Like I'll show you one example. I have a realtor who reached out to me through social media. And I wanted to show her what I do because there was no opportunity for a coffee meeting. She's super busy, didn't want to meet up. So I showed her how I use TCAs at open houses as a marketing tool. And for this exact conversation, let's get people off the fence and into homes, showing that I just take it deeper than I would say most mortgage advisors do.
So I want you guys to hear that. I did an interview. I think it was, God, who was it? It was Ryan Grant. It was someone a month or two ago. And like in today's market, to pick up market share in realtors, you need to have a superpower. Like you can't just, I close loans on time, I have great rates, I can close your loan in 10 days. That's not enough. You've got to have superpowers. Like, let me show you how I can get people off the fence, and they need to see your cape. Like they need to see your cape. So what Sean just said is he's showing them like, hey, I've got stuff other loan officers don't, and let me show you. So they're seeing his superpower. So actually I would love to see that. I mean, I don't know if you have it where you can show it. And guys, put your questions that you have for Sean. He kills it on social media. He does a great job of what I would just call the art and science. You know, sometimes it's like lifestyle. I'm a local dude doing local things. Anybody who watches Sean, you like him, you dig what he's doing. And then sometimes it's financial literacy education, or it's telling a story, story selling. So tell us about this one.
Okay, so we on? Okay, so this is so this realtor reached out to me. She's partners with another agent. So she had an open house. She put on social media, open house. I said, hey, I'd love to help with broker tour. And I just use broker tour not to meet other real estate agents, but it gives me 3 hours with somebody I'm trying to connect with, right? So it just deepens that relationship. She said, sure, let's do it. I would have had my TCAs are really the only flyer I use for open house, broker tour, any of that. Then she said, hey, my partner doesn't want me to have you there because it would offend his lender, right? And I'm like, fair enough. Like, I respect his commitment to his partners. I love that. But it doesn't mean I can't help you market the property. So I built out this TCA. The property was listed at $1.7 million. And the reason I do this, I don't want to just show rate options. I don't want to have a finance flyer. I want to address the thoughts and concerns that we know are on every buyer's mind. So when they walk into that house that's listed for 1.7, they're thinking, man, I wonder how much I'm going to have to pay for this. So going back to it doesn't matter what the house costs, it matters what the house costs you philosophy. I wanted to show her, look, if they go 100,000 over list, your monthly payment's $480 more a month. If you go 200,000 over list, and this is a high price point, you're going to be about $1,000 a month more. Is the house worth losing over $500 a month? Is the house worth losing over $1,000 a month? And this little video that I recorded was specific to the agent. So I just said, hey, thanks again. Sorry, I can't hang out with you, but this is how I use this tool to show potential buyers what things look like. So even though I can't be there, I hope this can be a conversation starter for you. And that's my kind of number one way of when I meet a new agent, hey, this is how you shouldn't be asking for, hey, what are rates? You should be asking for, how do I address buyers' concerns?
And guys, how do you solve the problems of that property? And that's what he's doing. He's not selling his product, which is rates, his execution. He's selling how he solves problems in the marketplace. So highly recommend you guys are getting out. You're showing agents, listing agents, how you can help them sell their home. There's cost of waiting, seller buy downs, appraisal gaps. It's time to be a mortgage strategist. So you go ahead and stop sharing this, Sean. Hey, wait, before you stop sharing, pull it back up. I want to see something. Go to we call it the advice engine where you create a TCA. Go to that real quick and go up to the upper right-hand corner where it says settings. Settings. So guys, look at that. He's created 2,222 and they've been viewed over 19,000 times. So that's on average about 10 views per TCA. You go ahead and stop sharing that.
I didn't even know that was there. That's awesome.
Yeah, no, I had a feeling that you'd have a really high share rate. So I would anybody that's a mortgage coach on this, look at how many TCAs you have and how many times they've been viewed. And if it's less than 3x, you're very below average. If it's above 5x, so you created 1,000, they've been viewed 5,000 times, that's pretty good. If they've been viewed over 8 times, you're in the top 20%. And Sean, you can see they've been viewed on average 10 times. And what that tells me is, number one, he's, socializing it with the consumer and positioning it in a way that they see it as a resource, and that he's updating it. He's looping in the realtor, and he's putting a lot of videos on them. Is that fair to say? Like, everybody I talk to that has over 8 or over 5 views, they're doing it right.
Yeah. And I will say this, I was not putting videos on every single one. And I do now. It's super simple. I don't record on my phone anymore. I just use my little webcam. And as soon as I have their pre-approval letter ready, have built out their buyer's guide site, I'll just record a little 30-second, 1-minute video. Hey, thanks again for your time. This is the buyer's guide we'll use. Every detail is here to give you full confidence, transparency. Looking forward to catching up. Talk to you soon. And it just makes it more personal. So I was not doing that. I probably started doing that about 6 months ago.
Did
I'm just
Jeremy
noticing I don't have my badge for videos.
Did Jeremy Forcier get you to start doing that?
No, I saw the button and I'm like, why am I not doing this? And then I was like, I'm just going to make this my new habit. And so I wish I could connect with Jeremy more. I never get to talk to that guy, but yeah, it was just like, there's no excuse not to just record this video real fast.
No, dude, it is, guys, you want to optimize conversion. You want to optimize personal connection. You want to optimize your competitive advantage, give people an experience, put a video on it. So Sean, I know you're also, you're not only killing it personally, but you're ready to get back out and do some coaching and help some other loan officers. So first of all, I'd love to know why you've decided to, take on and coach a few folks. I just want to hear your why behind that.
Yeah. So basically what it was is in 2017, I was tired of working for everyone else, right? So I put out all the effort and my income was dependent upon their effort. And if they didn't put out the effort, then I didn't do well. And that's why I got to a point of saying, forget it, I'm just going to do this myself. March of 2017, it was my first year, third month in, I closed 4.5 million. And I remember somebody came up to me and said, how did you do that so fast? And I'm like, I just did what I told you guys to do, but you guys didn't do it. That's the only difference. And so I was just kind of jaded where I was like, I don't want to deal with anybody else anymore. I'm just going to focus on my own thing and do it. And, I've had a lot of people reach out and I was kind of like, no, thanks, I'm not interested, but I miss it. I like helping people. And I feel like I've kind of found my groove personally, and it's different than what most, I don't follow the norm, and I found my way. So my goal is maybe I'm going to be working with maybe 10 people because it's just me, right? It's not this big giant platform. It's just me. I don't want to show them my way. I want to help them find their way and their voice and their personal brand. Because the sooner you figure out what that is, the sooner you attract the people that you would ideally like to work with. So that's really what I want to do. And obviously, as I was building it out, I'm like, if you don't want to use Mortgage Coach, then I can't help you because it's such a critical part of the process. So if you're not interested in using this platform, then I'm not the right person, unfortunately. But that's really what it is. I just got to a point where I was like, you know what, maybe it is time for me to start giving back again. And that's why I'm doing it.
Well, it's good to have you back as a coach, although it's been fun to watch you grow as a player. So guys, Sean Herrero is now a player coach. He's gonna, keep it pretty tight, pretty small group, and I do recommend you have people apply for the opportunity.
Yeah, absolutely.
Again, do whatever you want, however you want. I'm always excited, because my goal is to change how people get into debt in America. That means we need to level up mortgage professionals. I still believe that the loan officer is the single most valuable advisor to a consumer. And I know you crush CPAs in your market, you crush financial planners. The value a consumer gets from you is better than any other advisor, but there's not enough Sean Herrero. So I'm excited that you're going to be mentoring and coaching some folks. Anyone that wants to follow you on social media, or they want to find out, what it would look like to have you as a coach, what's the process?
Yeah. So I'm at Adventure Lender on Instagram. That's the #1 platform for social media that I use. You can DM me there. You can email me. Just, hey, Sean, I saw you with Dave and I'm curious how this works. And then we'll do a 15-minute interview. I want you to interview me just as much as, I'm interviewing you to make sure we're a good fit and kind of hear what your plans for growth are and where you're struggling. And then we'll figure out the right path. So for me, I try and oversimplify everything. It's not going to be complicated, but it's just a lot more listening. I had one person who came to me with some problems and I helped her, figure out the solution and kind of listen to what the problems she thought she had weren't actually the problem. And then we worked through that together and she's in a better spot now. So just little things like that, just a lot of listening and moving forward. And that's what matters. I want people to be successful. And I want people to help more people and truly not sell more people, help more people.
Hey, Sean, I would love to know if you've done anything like this, but I came into this year with a goal and I didn't know what I was going to do or how I was going to do it, but, start bringing more financial literacy content to high school students and college students. There is a financial literacy crisis in America. And, last week when I saw the governor of Florida, say, hey, we're going to make financial literacy a requirement in high schools. I interviewed a couple loan officers last year that were already doing that. They're already going out to high schools. They were partnering with realtors and CPAs and doing financial literacy in high schools. Is that something you've ever done or something you've ever thought of doing, is, just do some volunteer financial literacy training within your local market?
Yeah, I was pre-pandemic, I was doing it, and then it obviously got shut down. But for me, I hate student loan debt. I think it's one of the most broken things in our country, that we push kids into debt the minute they graduate high school. We just start them off and then they're stuck, and they think it's a requirement. I have to go to college. I have to use this money to go to college. And so with what we do for a living, you see, $300,000-$400,000 in student loan debt. Is it necessary? So I try to kind of speak to that. Credit cards, as soon as you turn 18, you're flooded with credit card ads. So we want to make sure we understand how it works. So I was doing it before, and really, to be honest, the last couple of years have just been stuck, doing this. I'm a small team. It's just me and my sister, who's my teammate. So just two of us, but I'm going to start doing it more for sure. And that's the other thing that I'm loving about using social media, is I'm using TikTok to reach like the next generation. So are they going to be customers today? Probably not. But will they be in the future? Yeah, for sure. And if we can show them the right way to do things, they'll love it. And they want to, like, just even talking to my own son, who's 19, he's asking me about how to trade stocks and day trade. And should I sell Lucid or should I let it keep riding? Like, I never thought about that when I was 19. So I like where this next generation is headed. They want to learn, and they're doing it all from their phone.
If I threw a challenge out to you that I wanted you to create a less than 5-minute video that a high school student would watch, get value from, and at some point have a little mortgage coach, like a little TCA home buyers guide.
Of course.
Is that a challenge that you'd be willing to take?
Yeah, I don't think I've ever said no to one of your challenges. So I'm not going to start
now.
now.
No to me before,
but not to a challenge.
Okay, you're right. So now I know your love language. All right. So guys,
yeah, I'll do that for sure.
Okay,
here's how it, just so everyone else knows, I would speak to student loan debt, credit cards, and then rent versus own. And that is what my video will be.
Bring it. Maybe we'll get you in this year's Modern Mortgage Summit again. If you could get that video soon enough, we'll play that and debut it at that event. So guys, Sean is killing it. If you've got questions for Sean, you know how to follow him. Look forward to him coaching some people and turning those guys into mortgage coaches. Sean, any closing thoughts before we wrap it, bro?
Yeah, one more thing, because you brought it up a couple of times and I wanted to touch on it, is the appraisal gap question. So the way that I address that, it's not mortgage coach specific, but I want to make sure that we all understand that if a property doesn't appraise, they don't necessarily have to make up the difference. So what I've been doing when I call the listing agent, because we know they're going to ask us that question, is explaining loan to value. So buyers think in down payment, realtors think in down payment. We all think in loan to value. So when I hear 20% down, I hear 80% loan to value. The loan amount is 647 or less, and they're putting 20% down. The property could appraise 15% low, and they don't bring in a dime, because the loan to value can go up to 95%. So I think it's important that we all educate real estate agents on that, because they need to understand that even if I don't have more money to show you, I don't need more money, because I have this gap in loan to value available to me.
And I'll bet you realtors would like it if you said, hey, let me tell you how I solved this problem. And then you describe that. Another way to, be different, have a competitive advantage to agents. Hey, one last question, and I don't know if you can answer it in a minute, but it's come up a couple of times in our Facebook group where people have been asking how to train your realtor to refer you. Oh. Do you put a lot of intention into how an agent refers you? And if so, could you give us just some sound bites on how you train your agents to refer you?
Yeah, so I think, one, I like email introductions, because I have my system built around that. So I say, hey, just send an intro email. It's soft, it's no pressure. And then I can reply and see if they want to set up a meeting. So that's how I tell them to do it, email, not text. And then in the event that I don't think the realtor drives the lender conversation as much as they once did. So I'll always hear, oh, Sean, I would have referred you, but they already had a lender. And so what I say is, look, just say, hey, do me a favor, talk to this guy, Sean, that I work with all the time. If nothing else, by talking to him, you'll find out you love the lender you're working with, or you'll find out that maybe you want to dig deeper. And that's it. So it just gives them an opportunity to not hard sell their favorite lender, but look, get a second opinion. There's no obligation, but talk to this guy and you'll either love who you have or you won't.
Love it. Got
Simple.
Got a soundbite. Any other closing thoughts before we wrap it, bro?
No, this has been great. Thank you so much. It's good to be back in the fold.
Well, hopefully we have you more active in our Facebook group. And guys, you know how to get in touch with Sean. Look forward to hearing success stories from your students. Take care, brother.
Thanks, Dave.